The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 24th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start of their day. Let's make a pact. Let's make sure that we do all that we can do to have a terrific Thursday. I'll do all that I can during the next hour to teach you some of the tools, some of the tactics for understanding where the markets are headed to. We'll take a look at A to B equals CD down patterns and up patterns. We'll take a look at Fibonacci expansions and retracements. We'll take a look at those Gartley buy and sell patterns. We'll take a look at candlesticks. Because the bulls and the bears, they are continuing to talk to us on a daily, a weekly, and any time frame basis, and you want to make sure you understand the messages that they provide to us. Our call-in number is 877-927-6648. Give me a call, folks. Happy to take your call. Let's go check out these markets out here right now. Dow, it's a flat market. We've got the Dow's up 5 points. S&P is up 13 pennies. You've got the NASDAQ Composite, the weakest in the group here. It's off $3. Not a big deal. Russell 2000 is up 75 cents. NDX 100 up 6 points. New York Stock Exchange up just slightly, up about 12 points out there. Goldilocks back $11 right now. She's trading at $12.93.20. Silver down 27 cents, trading at $20.72. Light sweet crude up 20 pennies. Leading the charge to the upside out here, we've got CoStar Group. CSGP is the ticker symbol, up a nice $16, up 11%. Out with numbers here after the opening bell this morning. Revenue is $147 million versus $109. $8 million in net income versus $8 million, but the wide price spread, accelerated volume. This thing is off of the bottom. Looks like it's also breaking its downtrend out here. If we take a look at that downtrend line, we could just start right here with the high that took place inside this equity. That was, whoops, grab the tool there. That'd be good. That's on the trading session of March the 4th out here. It has not broken the trend. It is trying to break the trend, so it's trading just up into the trend line out here. Again, that's coming off of the March 4th level, the next touch point being the high from March the 20th. But volume-wise to the upside out here is 285,000 shares out there. So it's got this little, not a big deal here. There's no wide price spread, just volume on the trading session of June 27th. Let's go see. What do these guys do out here? Oh, I'm in the wrong spot. Well, I could just add something. I don't know why I don't have it right there. How about that? I need to do that. But let me go. Let's go see what these guys do out here. Let me just do this here. Touch on this here. They'll bring it up on the screen. It's loading. Come on, tell me what they do. Okay, so they provide information, analytics, marketing services to the commercial real estate industry in the U.S., United Kingdom, and France out here. Of course, I saw some real estate numbers come across the screen. Looked like housing starts were down in May. Housing starts were down in June out here. Nonetheless, this equity, let's pull this back, made a price relative strength divergent bottom back here on the trading session. We saw a little bounce from it back here on the trading session of June the 15th. What do we have up here at the high? It's not a real liquid equity. On average, trades about 200,000 shares a day, but today it's already done 290. So we're seeing some fairly decent volume inside of this equity. How about that? Price came all the way back to an area where it had broken out. This is back here in the trading session. This is a daily chart we're looking at, July 25th out there. So talk about how price comes back to a breakout area. That's what it did here, which is in the 138.01 level. Take a look at how price came back into that breakout area. Volume, by the way, on that breakout was 400,000 shares, and his price was coming back was with 300, 329, 246. So it's coming back with light volume and now off of those session lows out here. If this thing breaks the trend, what we are likely to see, likely moves inside of this equity, by the way. If we take a look at just simply its current move down and up, you've got probably 187 201 would be the price areas that you might want to take a look at. That is on CoStar Group, CSGP. Being the ticker symbol out here. We've also got Tyler Technology, TYL is the ticker symbol. That's gapping up into a swing point here this morning. We take a look at that. Its most recent swing point is back here on July the, July 2nd? July 2nd. 272,000 shares, gapping up into it, already done 110,000 shares. That's pretty powerful. Now, this does have a little supply line that it's got to contend with. So really, in order to change its polarity out here, if we take a look at the area of 99.51, 99.51 is the bottom of the area where it broke loose from. So that's a breakdown session. 1.4 million shares to the downside. Volume so far today, 114,000 shares in 45 minutes or so of trading. Not too shabby, but this is going to run into some pretty stiff resistance at 99.51. So if it can get above 99.51, that resistance level, that'll be gone, and really old resistance should become new support out here. Equity doesn't really look too bad. Let's turn back on our market profiles out here. Give me a moment to do that. And see what that provides to us as far as any kind of information out here. Yeah, it's breaking its trend to the. There's no question it's breaking its trend that it had to the downside. It really began doing that, with real conviction. In essence, was when it started doing that on the June 5th level out here. But it just has that resistance. That is TYL as the ticker symbol, which is Tyler Technology. Under Armour, I don't know if we looked at Under Armour. I think we might have done it at the before the open, but let's go check in and see what Under Armour is doing out here. Taking out swing points, doing it with the volume. The swing that it took out here this morning was from March 19th, 2.5 million shares. It has already done 3.5 million shares. So Under Armour showing another sign of strength. This thing had gapped up, nice wide price spread. Price just simply came back to that area, never completely filled the gap. And I'm referring to the trading session of January 30th. So a second move topside with volume out here. That looks pretty darn good for Under Armour. Where's it headed to? It's breaking out of a base. That's for sure. I think expansions, I don't know if we did this earlier. Let's just take a look at expansions of swing points out here. So it's already gotten to the 1.272 expansion. That says that Under Armour wants to get up to $73.11 as its next target area. So all looks pretty good right there for Under Armour. Let's see here. Let's take a look at what else is moving. Let's look at a couple of things. Well, I did have a request to go take a look at from our Tigers Den. Folks, if you're new to TFNN, welcome, by the way, to TFNN. We are carried live through the eSignal platform out here. eSignal is a data service that I have used forever. I now utilize their charting tools as one of the primary tools out here. And great service. In fact, if you'd like to test drive the eSignal platform, normally if you go to the website, they'll give you a 30-day trial. If you call them, tell them TFNN, tell them Stevie's son, well, tell them Steve Rhodes, Tom O'Brien, tell them the folks at TFNN sent you, they'll go ahead and they'll give you a 60-day free use of the system out there. So you can utilize some of the same tools that I use here on the show and assist you with your trading out there. So take advantage of that opportunity. Great opportunity to be able to do that. Now, I just lost track of what I was thinking of doing. How do you like that? Man, I know it'll come back to, it's with regard to what somebody wanted me to look at out here. Solar City. Yeah, I think that was the request. So let's go take a look at Solar City, SCTY, I believe is the ticker symbol. Yeah, there we go. So now I don't recall anybody telling me whether they were long, short, looking to get in, not looking to get in. So let me go take a look at what Solar City is doing. Trade up at 69.84 right now. It does look to me like it's got an A to B equals CD pattern to the upside here. Springing off of the C point nicely on this trading session of June 16th. Volume-wise, 68 million shares behind that move. Now, it's got to deal with a swing point. It's traded into this B point, which has 40 million shares. It did that, had a light volume trading session on June. That's a weekly chart we're looking at. The weekly chart, even Steven, the weekly chart didn't have enough volume as it got up to that B point out there. So just been moving sideways here for a couple of weeks. Let me take a look at the daily chart here right now. So let's come back and look at the daily chart out here. Daily chart shows the swing point, that same swing point that it needs to contend with in order to complete and form an A to B equals C to the upside, has July 2nd, 6 million shares. Now, 2 days ago, 2.7. Yesterday, 2.5. It doesn't exactly have conviction behind its move out here, especially after a nice breakout session from June the 17th. Nonetheless, let's pull this back out here. What else do we see inside of Solar City? If it breaks that B point with some volume, that's what's going to set up your large A to B equals C to the upside. It has a high volume. It doesn't have a high volume high out there. So that's not what it's targeted. So the question of the den was, what would I take a look at Solar City? I hope that I provided you with enough information on this. It does look to me like, it at least wants to run up to the swing point here from July 2nd. So expect it to get into the 72.01 to 76.06 range, and you'll just have to pay attention to volume as it's getting up into that level. That was Solar City out there. Let's take a look at, let's come back. Let me take a look at some things that are moving today, both to the upside and to the downside. So you got Puma Biotechnology off $25. Not a big deal. It was up $260 yesterday out there. Core Laboratories, though, CLB is the ticker symbol. That's trading to the downside, 10% off, 9% off, $15. Let's go take a look at that. That's taking out a swing point. That's a high volume low out here that I see right now. That's the trading session that it's trading into. That was from just a few days ago. Well, it's again a weekly chart, so it's taking out a weekly swing point here. That high volume low is 150.50. You're trading at 152 right now. Volume here for the week is pretty low, but let me take a look at the daily chart. Let's see what it's doing on the daily as it's coming into that same area. Yeah, so here's that high volume spike out here. So it looks like at a minimum that level should be tested. Again, that number 150.50. There were 5 million shares down there. It's done 499 in an hour, so it's not enough to really bust through that low. If it does bust through there, it's going to set up an A to B equals CD to the downside. Inside of this equity here, your A point is going to be these highs from the trading session of April 21st out here. That's your A point. Your B point is going to be that high volume low that price is continuing with right now. And your C point is a little retracement up into July 1st out there. That would give you a 1-to-1 A to B equals CD down to about the 97.90 level. Trade right now at 152.81. But it needs to be able to break that B point. I don't think it's going to break it with volume. But if it doesn't break it with volume, it still can move down to that level out there. Right now, we've got the Dow is, let me see, the Dow is up 2 points. The S&P is down 15 cents. Let's go barefoot water skiing because we've got a flat market out here. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 3. S&P is down 18 cents right now. Let's take a look at the FTSE out here. In fact, let's do a couple of different things. First, we'll take a look at the FTSE. Then let's get a feel for what's going on inside of the markets. We'll take a look at longer term, intermediate term, daily term, and try to paint an overall picture for the different time frames that the market is trading. And now we're looking at the FTSE here, which if you're watching us on Tiger TV, you can see I've got a little consolidation box. Let me try to darken that line. Let me use just a little bit thicker lines out here. There, that's nice and thick. So if you're just listening on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. You can catch the archive of this show on Channel 10. You can also see it streamed live to your smartphone device. You can do that right now just by coming to the homepage of TFNN.com. And up in the upper right-hand side, you will see 3 little buttons. One button with 3 little smartphones on it. Click on that. The show will stream live. Now, the FTSE has been traveling in a 430-point consolidation pattern out here, and it's been doing that really ever since October in 2013. It's a daily chart that we are. This is not a daily. Let me see here. 11, 10. Yeah, it's a daily chart that we're looking at on my screen out here. And you can, at the top of the consolidation box, by the way, is 68.67, right around there, give or take. As price did try to break above it, which was on May 13th and then May 15th, the bears got in the way. A little key reversal session, bearish engulfing at the highs out there. So really, the level that the FTSE needs to break in order to break out of this consolidation would be a close above 68.94.88. Now, what's interesting about the FTSE out here is if you take a look from its last swing point low to high, the 0.618 retracement there is about 66.55. It is 66.55. As price made an intersession low on July 10th, got down to 66.43, closed at 66.72. formed a 3 drive to a bottom pattern at a 0.618 retracement level. That's really important. When those patterns occur at retracement levels, they got to make you pay attention. They should make you pay attention. So you've got one of the more bullish patterns, just like the opposite of what we're looking at inside of the Dow, one of the most bearish patterns. That's why we're watching Dow 1710, whatever the number is, 185 or so, I think, that I gave to you earlier. This low here that we've seen, this 3 drive to a bottom pattern, is just as important as far as communicating to us what it wants to do, as is the case of the Dow. Now, you've got one of the more bullish patterns out here, reversal patterns taking place at a 0.618 retracement level. It says that we ought to see the FTSE go back and at least test. There's nothing here today that indicates to us that it doesn't want to do that. In fact, they had a little hammerish style candle out here on July 18th. If we take a look at A to B equals CD patterns inside of the FTSE out here, we'll see that it's got the 1-to-1 on this is 68.39, the 1 to 1.272, which is more likely what I would expect it to do. Get you right up into that area where we saw that big key reversal session on May 15th out there. So my expectation, the patterns that are here inside the FTSE, is that it wants to get back up and test that consolidation high. Now, if it breaks that, if it breaks that, our markets are also going to likely break up to the upside as well. And that's a 430-point consolidation that it is traveling in. So you just need to add 430 points to 68, 67 or so, and that's where your price projection would come in. So that's what's going on inside of the FTSE. Now, why did we take a look at that? I don't know. Just thought it would be a good place to, when I saw the 3 drive to a top pattern or bottom pattern that I had out there, thought it would be worthwhile to share with you. Now, how about this? This is no, that's not what I wanted to. It's not the tab I was looking for. I was looking for, not that this is a bad tab, by the way, but I believe this is probably the, this is the sell in May. Well, anyways, let's just come back here to the monthly chart for the S&P. So here's a beautiful chart. I think it's a beautiful chart for the S&P 500. We take a look at the S&P 500 on a monthly basis just to give you a feel for what's going on. You've got a much longer-term consolidation pattern, right? You have a 16 years worth of consolidation. The consolidation pattern began here in April of 1997 when you had price at about the 733-ish type range out here. That price was tested back in October of 2002. It was tested back in our March 2009 lows out here as well. The top of the consolidation were the 2000 highs. If you just measure from the bottom to the top, you've got about 800 points. An 800-point break of the consolidation high, which is 1555, gives you a price objective of 2350. Forget about the rising price channel lines and prices above it. It's not really doing anything. When price is rising, it's not like it's a breakout. It was already breaking out to the upside out here. So what we know on a longer-term basis is that the S&P 500 wants to get to 2350. It's well above that consolidation break. We get back. Let's take a look at a weekly chart. Let's take a look at a daily chart, just simply for the S&P 500 or anything else you'd like. But you got to give me a call, 877-927-6648. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 15 right now. S&P is up 1. Struggling out here is the NDX. The NASDAQ Composite's off 2. The NDX 100 is off 5 points out there. So we certainly want to pay attention to that. But let's go back to the S&P 500 out here. So we know what we've got is a measured move price projection of 2350. Now, what doesn't tell us when that's going to take place. So we got to come back and take a look at other tools and try to identify, what things could get in the way. Now, this is a monthly chart, just using my Ninja Trader platform out here, and this has it's got one of the versions of the Rhodes Momentum Indicator signals and strategies on here. Now, when the S&P was making its high back in 2000, it was making one of those terrific price relative strength divergent pattern. That's where price was moving higher. It was doing it on less energy, and we got a reversal signal here that was during the September 2000 time frame. And then you got a couple of other follow-throughs back in January of 2001 that gave you an indication. And then take a look at all these green little indicators out here telling you that you just absolutely have selling pressure inside there. That changed back here. In fact, it made a low. It made a price relative strength bottom. I'm referring to the S&P back in 2003, in March of 2003. Now, the next high, the next top that came in inside the S&P, that was back in October of 2007. Bearish reversal signal, moving higher, less relative strength. Now, what I take you through now, we're not done with the month of July here. We're not too far away, though, right? It's, July 24th out there, so a week from today, and the month is over. Now, up through June, we had a similar price relative strength divergent pattern that was forming. No reversal signals, though, so it's just it's like a weather forecast. It's just a, cautionary sign is all it is. But that now, we have moved higher with more relative strength in the month of July. that actually tells you just how strong the market is out there as we speak right now. So at this stage, this monthly chart is saying it's got no problem continuing higher towards that 2350 level. It doesn't have to stop there, no, but that is really the price projection. So the current monthly chart is in as strong of a leg up off of the October of 2011 time period. It has been just long and strong, and there is no monthly reversal pattern to have to worry about. Now, if I take this down to a weekly chart out here, weekly chart tells the same picture. It's really no problems. There's really no significant. In fact, the last real buying opportunity in the S&P on a weekly basis, that took place right out here in February 2014. We made a low, right, February 5th, 2014 on the daily chart. Obviously, it was also made in the weekly. It was made in the weekly chart out here, and you got a nice little buy signal the week of February 7th, the week for sure February 14th out here. Nothing but all these little red signals, red boxes. You may not be able to easily identify them, but the monthly chart is showing nada. A weekly chart, I'm sorry, where we're at. That's not showing any issue whatsoever that we have to be paying attention to. Let's go take a look at a daily time frame. Now, daily time frame says, okay, you know, that July 3rd level, as well as the July 3rd level where we saw price get up to the highs with, with the pretty strong relative strength. We're moving up right now with less relative strength. So the daily chart says, maybe. We don't have any kind of reversal signal here inside of the S&P 500. If we take a look at A to B equals CD patterns, let's go draw that in here. The A pattern on here is going to be our low back on February 5th. Your B point out here is going to be the high that came in on April the 4th. Your C point is going to be down here from April the 1st. Now, what do we know? We know we're above the 1-to-1 A to B equals CD. Retracement we did for about 52% retracement. That says what? It says we want to go higher. We want to go to the next floor. Not we, but, well, yeah, we, because I'm on the long side here of the S&P 500. And so at this stage here, it says it wants to make a move to the 2017 area. That is the 1.272 expansion of this A to B leg out there. So, yeah, moving a little bit higher with less relative strength. No reversal as we speak right now, 1038. I can't control what the market does next or the next piece of news that comes out there. But what we can do is we got to take a look at the information that we've got at hand here. So the reality is there's actually nothing to fear here. There's no signals on a daily. There's no signals on a weekly. There's no signals on a monthly chart out here with regard to just simple outright pattern recognition tools that suggest that the market does not want to move higher, with obviously one exception right now, and that's that daily tool inside of the Dow. And that daily tool inside of the Dow where it's got that 3 drive to a top pattern out there, that's the one thing that we want to focus in on. Dow Jones Industrials. That's the one thing we want to focus in on. But if I take a look at a daily chart, really no big deal here. It's just really been trucking along. There's nothing really bearish other than this candle signal from July 17th. And if that high, or when that high gets taken out, folks, then you've got all of the fuel. Then the most bearish pattern that is out there becomes perhaps the most bullish pattern, right? Because when the most bearish patterns fail, then the markets ought to move higher. Now, if you go take a look at the Russell 2000, let's go do that. Russell 2000. That has made a 0.618 retracement from this hammer candle low down here on April 15th to the high that was put in. Russell 2000 on its trek up. It's got to get through this little area here. It's real congestion. It's still not bullish, although I will tell you it gave you a nice big bullish reversal signal at the 0.618 retracement on its daily chart, and that was right here on July 18th. Right now it's just contending with the 8-day exponential moving average out here. It's got some resistance at this little gap down really from the lows here of July 8th, but I'd say if it gets above that level, July 8th low, by the way, is 1167. You probably start to see the Russell 2000 form an A to B equals CD to the upside. At a minimum, it ought to go back and test its current consolidation area. Now, the interesting thing here about the Russell 2000, let me just flip this other chart up here. The interesting thing, see if I've got it. I don't have it. I think I did it maybe on the futures contract. Well, here's the deal. Let me do this. Let me come back over and we'll put the Russell 2000 up here. And maybe in some instances you just have to believe me. Nah, you don't have to believe anything I say. Here's the Russell 2000. Now, the Russell 2000, here's the monthly chart. Price ran right up into a primary trading range boundary line. That was at the 12.13 level out here. So that really stopped price. But what we do know is that the Russell 2000, just like the S&P 500, it had an 11-year consolidation pattern, which it broke out of with conviction in January 2013. Its price projection on a monthly chart is 1350. 1350. If we go back and let me see if we can do it this way. Let's do this here. Let's come over. Let's take a look at the Russell 2000 index on a daily basis. Now, what I'm going to do here is I'm going to clean this up for us. Give me a moment to do this. I'm going to go ahead and close off some of these tools just so we can clean things up just a bit here. Let's let's get rid of this and this. Let's leave the other price relative strength divergent pattern in here. What the Russell 2000 has been doing has been traveling in a consolidation. Now, the top of the consolidation box out here in the Russell, very clear to see. That's at the high from March the 4th out there. We can see how price got up here, tested that level, did it on lighter volume. So you've got 1213 is the number. The bottom of the consolidation, I'll just go ahead. It's really been consolidating. I'll just use this right here. We're going to use the trading session here from February 5th. And it's really been consolidating it's been in a longer term consolidation than that, because we can move that back. That's at 1082. We can move that back to about here, and you can see a very long term consolidation. So you're at about 1082. So if you do 1082, 1182, you've got 40 points, 140 points. Add 140 to 1212. What do you get? 1350. So you've got a monthly Russell 2000 that has a price projection of 1350. You've got a weekly that says we're in a consolidation. If we see the Russell 2000 close above 1212, well, let's use these. I think the actual high now is from July 1st. That's at 1213.55. July. So you see it close above that. You want to be all over it. You want to be taking a long position inside the Russell 2000, because the daily and the weekly will have all kinds of synergy. And actually, if you take a look at A to B equals CD patterns out here, if in fact that's what's forming. I don't know if that's the case. This consolidation could go on for a long, long time out here. But the A to B equals CD pattern inside this takes us up into about the 1-to-1, 1262, the 1-to-1.272, 1298, and the 1-to-1.618, 1343. So a great trading pattern that is out here. You've made a 0.618 retracement. There hasn't been any volume to speak of. There hasn't been any real great candle confirmation other than the bullish engulfing candle that took place here on July 18th. So the next real confirmation for us inside the Russell 2000 on anything is going to be what happens if, in fact, it can get above that B point, get above that swing point, get above that consolidation high. And that's at 1213.55. And if it does, then the Russell 2000 will be off to the races, headed up to the 1350 area. So let's take a look at those two. And then we've got one more element to look at. That other element here is going to be the NASDAQ composite. So I'm just really trying to put this picture together for you. Well, there's a couple more pieces of the picture. If I put this picture together for you and we take a look at the NASDAQ composite, man, we've got 7 more trading sessions. Not 7 more trading. We got 7 more calendar days until July is over. The swing point high on a monthly basis, the swing point low, I should say, is 43.55. Guess what we did here in the month of June? We closed at 44.08. So you got 1 month where we closed inside the all-time swing point high. As you know, when you close inside a swing point, chances are you're going to go drift up and test the high of it. You don't always have to, but that's a pretty good chance. Now we'd have a second month in a row where we'd be testing a swing point high. Now, if we take a look at this whole picture and how this is coming together here, take a look at the cycle work that I've done here that's got a cycle of about 23 months, I believe, is the time frame. This would be October of 2000 to September 2002. Yeah, so it's got 23 months out here. There's these little humps out there. And these little humps identify what ends up being as key swing point highs or lows in the marketplace. I did it here in the month of September of 2002. It did it in the month of August 2014. It did it again in July 2006. I did it again as far as identifying a high, July of 2008. It did it again here in June of 2010. In what we did have come in here in April of 2014, guess what? Well, it looks now to me like a swing point low. And I know we can come up with all kinds of reasons why all this stuff shouldn't be happening. But, my role is just simply, let's just take a look at the stock charts. Let's just see, because I should be agnostic as to what it is that we're looking at. What it says here, and I am. So what it is when it comes to the fact that we're in the composite monthly chart, what difference does it matter what chart we're looking at? Because if I gave you, if you took away all of your beliefs about the market, and we just were taking a look at the stock patterns that were out here, and we know that every 23 months the NASDAQ typically makes a significant swing point higher or low out there. How would that, or this chart makes a significant higher low. How is it that price came down into by the way, the horizontal blue line at 39.42 happens to be a primary trading range boundary line. That's brought to us by Bud Rolfs. All I did was automate this tool out here. So it's used differently than the way Bud does, but that's because I'm just taking advantage of information, of data that's available to me, so it can go identify the area where we have the largest number of opens and closes, and that happens to be at the level of 2,056.29 to be exact. And then I just use some additional mathematics to identify where those trading range boundary lines are out here. And the next trading range boundary line would be, just take, you were above that, which is 44.12. So 39.41 to 44, that's another, so 39, what is that? 39 to 44, you're looking at 500 points. So 44, that gives you 4,900, 49 to, and 52, and the actual high of the composite is 51.32. Folks, unless something changes, as I say, that's at 10:47 a.m. That's on July 24th. It's an absolute message, in my opinion, about what the markets want to do out here, and that is until something changes. That could take place at 10:49. I understand I can't control what the markets are going to do, but we can control is what is it that they are doing right now, and what is it that we have as far as messages of the markets. And I get a number of emails from folks out there, and I appreciate that. You're welcome to send me the email, steve@tfnn.com. You're welcome to have an opposing view. I'm all about that. In fact, I think it's incumbent upon us to always take a look at the trade and figure out what the bullish and the bearish side of the trade is. Now, where are we at right now? You've got some struggles going on inside the NDX 100, inside the NASDAQ composite. The easiest thing for me to do to figure out what, if any, meaning is behind that is just take a look at what's going on a 120-minute time frame. And on the 120-minute time frame, when we opened up the Trader's Edge show at 9 o'clock this morning, I said, hey, here's a potential cautionary sign right now inside the strong indice out here. That's the NQ on a 120-minute time frame. It's now got a price relative strength divergent pattern that it has confirmed. It's confirmed from the standpoint that we got a bearish engulfing, an evening star, which is a 3-candle formation, and we're seeing a little bit of follow through. Now, this candle doesn't complete until 12 noon. That'll be at the end of Basil's show, who's going to be up in about 20 minutes or so out there. But at the end of Basil's show, if we do see a little bit lower close inside the NQ, it says, okay, we've got some selling pressure inside the strong indice out here. Now, where it's going to take us to, it hasn't really given us a reversal signal out here. But when we come back, let's take a look at where price could move to. We'll take a look at the other side of the trade, but on the 120-minute time frame. This is Steve Rhodes. This is TFNN. Click on my name on the Trader's Edge show on the homepage at TFNN.com. Sign up for my newsletter services. 30-day unconditional money-back guarantee. You'll be happy to do it.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Up 7, S&P's up a point, NASDAQ Composite down 3. Don't forget, the Hotel California check-in time now here at TFNN is 8 a.m. each and every day. Our man John Logan kicks us off. We run from 8 a.m. till 6 p.m., so we got 10 hours of live programming out there. If we take a look at the NASDAQ, the NQ, the 120-minute chart out here, so we show you a reversal pattern that is in place. Now, the question is, and as I said, if we see a trade lower here, close lower, a close below, let me give you the exact number here, a close below 39.75.75 at 12 noon. We'll have the second version of a confirmation of a move lower. We won't have the third confirmation. I wouldn't be jumping on the short side unless we got the third piece in here. What I can tell you, let's just take a look at a couple different price targets. Right now, we take a look at the last time that price had moved lower. There's a little black squiggly line going across my screen out there, a little thick line. That represents the 20-period exponential moving average. Last time that we saw that was tested was back here in the trading session of at 12 noon, by the way. That was back on July 21st. Formed a nice reversal signal there, didn't it? Hammer candle, followed up by what? A bullish engulfing bull sash candle out there. That was telling you that the bulls were out defending that territory. Look at what the market did since then. Just simply moved higher. Any kind of bearish signal that came out here just simply has been stomped upon, other than till where we're at right now inside of the market. Now, if if you see a hammer candle that completes here at 12 noon. Guess what it did last time that price had gotten down there? It also had formed a hammer candle. And that would be telling you intraday-wise that, you know what, this price relative strength divergent pattern, I see you, I love you, but I don't respect you, and I'm going to go ahead and move higher because the bulls will be out. And if we take a look at the message of the VIX index right now, we'll come back to the NQ and take a look at if it breaks to the downside where the next area is. But if you take a look at the VIX index here, all it's done is tag the 50-day exponential moving average, and it has bounced off of that. Staying below that is a very bullish sign. Your next bullish sign, and from a bullish standpoint, or from a bearish standpoint, this is not what you want to see. From a bullish standpoint, it's what you do want to see out here. If we take a look at the, and this is the Euro Japanese yen. Right now, it's up towards its session highs out here. Big reversal pattern, big key reversal session. Guess what? It's now up inside its rising price channel out there. We'll see how this ends the trading session, but that's more bullish. It's not bearish. That's more bullish than bearish out here. It still has some work to do. No question the upside. Now, to the downside. Let's say that we don't get any kind of reversal signal, that there's continued selling pressure inside the NQ throughout the day. The next area to look at where price would likely find support down here at the this little blue line that I've got here, and that blue line is the 50-day exponential moving average. That same hammer candle that occurred at 12 noon on July 21st out there, that is the actual low, almost low to the tick of the session that took place on July 21st. So I would expect if we see price close below 39.7025 at 12 noon or any time thereafter, what you're likely to see is price move down to 39.51, and that probably becomes your target area for a buy. Of course, you're going to want to see some kind of reversal signal. So you want to be able to take a look and look at that. So hopefully today's summary overview of the markets gives you a pretty decent view as to where the markets are at. Taking a look at the Russell, the NASDAQ, composite, and the S&P 500. Folks, my weekend starts early, so have yourself a great weekend. I look forward to seeing you Monday morning. Stay tuned. Our man Basil Chapman is up next. It is Terrific Thursday. That means following Basil, we got Larry Pesavento. We have Daryl Martin, David White. Tom O'Brien show begins at 3 o'clock today, so 3 to 5. And then we've got our man Andy Heck taking us home from 5 to 6. Have a great Thursday. Have a great weekend. I look forward to seeing you Monday. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.